All right, let's move over to uranium.
So I think that there's going to be, higher for longer. I think it'll start to build new bases, very similar to the gold markets, to some of the other metals that have found, even though they may be lower at times, they're still finding bases that are much higher than past history, right? So I think that it will be higher for longer. I mean, there'll be pullbacks and sell-offs, but I think that overall, I think the trek is higher, especially because of the needs and the demand for it. You don't think that these banks that could lend out as much as they want to anybody they wanted, okay, knowing that they would be bailed out by the American taxpayer once again, worried about it. Someday you're going to wake up and there's going to be the big banks are going to be collapsing. I mean, look at JB Diamond, JB Diamond, the Diamond. He just sold a bunch of his stock at record highs.
Okay? That was the first time he sold ever.
So at the end of the day, I think the banks are knowing that they're going to get bailed out. So what do they care? Well, so what business can you be in that you can go bust and get bailed out by the American taxpayer and do it again? So I think that that's going to be a much bigger meltdown. And again, I think that's the whole thing that's holding up the house of cards that we're in right now, is that they're not making the banking system. It hasn't totally defaulted yet. We had one little scare, and they bailed them out right away, which is ridiculous. Why would you bail them out when you're breaking all the rules? Okay. And the depositor knows how much you can have in a bank account. So to me, they bent the rules, but at some point you can't bend them any further. It breaks. And I think we're probably close to that point, but close could be a year. I mean, again, it's hard to say.
Okay, so you think it could happen within a year or two? This is not a story, in your opinion, that's way out into the future. You think?
No, I think it's sooner than we think. I think the warning signs, we're seeing them now. I think the warning signs in the market right now. I think the divergences between the cost of production of food and the cost of retail is a problem. I think the oil markets are a problem. Again, I think this whole bull garbage of EVs and all the other stuff is a problem. I think this is all a problem, and you're seeing a lot of it already melt down in front of you. And at some point, it does all start to melt down together. But if you don't heed the warning signs as they come and say, I better pay attention, okay, suddenly it's too late. And I think that's what's going to happen, as it always is. Just like we'll see, you'll have the private meeting of all the banks, and they'll force them all to take money, even the ones that don't need them again.
Yeah. So, I'm sure you remember this. Just a week or two ago, the Fed removed the line about a sound and resilient banking system from its most recent Fed statement. Do you think this is part and parcel to what's going on with what you're just talking about?
I do. I can't imagine, knowing what I know, watching what I'm watching, that the banks are not in deep garbage and not so over leveraged, but getting the pass. And of course, again, it's pretty easy if you know that there's somebody standing behind you to bail you out. There's no reason for you to panic yourself. So why should you worry about it? It's like Mad Magazine. What, me worry?
So before we talk about, some commodities, uranium, gold, silver, and the miners, I want to ask you a question about de-dollarization. Some say that there's no impact of de-dollarization efforts by the BRICS Plus, while others say that there's incremental impact slowly and then one day all at once, but that's way out in the future. Todd, in your analysis, is there an impact to the BRICS efforts of de-dollarization? And if so, what are we looking at here?
I think that they're so screwed up. I don't think they have any idea which way they're going. I think that, again, this whole fiat currency system that they're trying to now bend around. I mean, it goes back to when the euro currency was first born, and when they took away the gold standard, we took away this. I think that you've got the central banking systems, which started in London in the 1600s, which busted out their economy and made them socialists years ago. But I think the whole process is to grab more control, okay, and become more of a situational and say, you have no power. We're total control. We got the money. We're going to tell you what you can spend. And I think this is where the issues come in. And this goes back to why I think you're seeing a little bit more action in the crypto world recently as well. Okay, I think that's why you've seen a little bit more buying going on in the crypto world. I think you've seen more participation there because, again, people are concerned from this de-dollarization to the digitalization of currency here to all the things that are going on that are really more of taking your freedom away from you versus doing anything of benefit to you.
Absolutely. All right, let's move over to uranium. I know you're very well aware of the supply deficit that's projected over the next 15 years. Do you see this as a higher for longer kind of the price of uranium being higher for longer rather than a 3, 6, 12-month spike up and come down the way it was last time, in order for there to be enough time for capital to come flooding into this sector so that supply ultimately down the road can have a chance to catch up?
I think it's probably higher for longer here. This is a material and that is not readily available. There's not an over excess. It's always a little bit of a problem. So I think that there's going to be higher for longer. I think it'll start to build new bases. Very similar to the gold markets, to some of the other metals that have found. Even though they may be lower at times, they're still finding bases that are much higher than past history, right? So I think that it will be higher for longer. I mean, there'll be pullbacks and sell-offs, but I think that overall, I think the trek is higher, especially because of the needs and the demand for it.
So speaking of those pullbacks that you're talking about there, the equities, uranium equities, have recently had a very strong pullback after a substantial run up. And in the previous bull market from 2005 to 2007, uranium spiked 900%, but there were 8 pullbacks along the way, ranging from 17% all the way as much as 51%. Is the current pullback similar to those, and are we in this long sustained bull market? And should we expect these types of consolidations and profit taking, or is there really no long-term uranium bull market here? It's just more hype and FOMO.
Oh, I think it's probably more of a long term. I think a lot of the hype and FOMO makes the moves much bigger. I think, again, remember, the hype and the FOMO make the moves much bigger. But when you sit back and realize that you do need, you get a move straight up of 15 or 20 or 30%, there's probably time to take some profits and look for some of a pullback so that you can be a buyer again. And I think as a trader, I look to bicycle around these positions. Whatever I have on that makes some ridiculous move to the upside, for example, I'll take some of the profit, I'll hold some of it back, but I'll always rotate around it, look for another spot to enter, because I don't care what it is. Every product ever that's gone straight up has come back down at a point and given you an opportunity to buy. I think the real problem is that the investors, they jump in like they got to get in today, which makes the move 51% higher, and then they collapse and now they're out and they have no money left to go in and buy. Versus if you understand that, at a certain point, something's going to pull back. No matter what it is, NVIDIA is at $900. At some point, it's going to pull back to $700. Okay, where? I don't know. But if you take the profit, then the money's in your pocket and you have a chance to reinvest it and buy it at a better price again. And if you miss it, you still got the money versus empty pockets.
That's great education right there. So many need to hear that. Do you see the uranium miners eventually applying torque to the metal and becoming a better investment than the metal itself? Or do you prefer the metal only and maybe just using a vehicle like the Sprott Physical Uranium Trust?
I'm not a huge investor in the uranium market because, again, I'm very concerned about the liquidity issue and the owning. I like to own physical stuff that I can put in my safe, I can put in my desk, I can put on my desk, which is why I'm a much bigger fan of silver, platinum, and gold. Okay. Again, I like to be able to control it. I'm never a big fan of buying something on paper because I think the paper, there's not enough out there to cover the amount of paper that's written on that stuff. So when I'm trading that stuff, it's very in and out, take it. I'm not going to hold it as a long-term investment like I would hold gold for a long-term investment.
Okay, interesting. All right, well, let's talk about gold. What's your 10,000-foot take on gold right now? What do you see upcoming for gold over the next 12 months?
I think gold is stuck in consolidation between 2,000 and 2,100. It's been there for about a month now, maybe 6 weeks. I think it makes new highs again this year. I wouldn't be surprised to see 24, 2,500, maybe a little higher. Again, I'm not going to make some ridiculous like it's going to Pluto. I think it's going to continue to go higher. I mean, certainly we could have a pullback, but it seems to me that 2000 has been a pretty solid base right now. So I do look for gold to continue to go higher. And I think that everybody's portfolio should have some representation of their portfolio in physical metal, not in GLD or not in a future, not in a minor, because again, it is my opinion, and I could be wrong, but it is my opinion that there's not enough gold in the world to cover the amount of paper that's been written on it. Okay. And if everybody exercised their rights at the same time, I think there'd be a shortage. I want to own the physical metal as a potential currency, because what we're talking about in Europe and what we're talking about potentially here, someday you might need gold and silver as a currency once again. So I'd like to have it in my hands, not have to worry about trying to cash my paper to get it back and hope that I can get out.
Yeah. So do you, last year, Ray Dalio was on CNBC and they asked him how much gold, should be in a portfolio. And he said, there should be a 10 to 15% overlay on everybody's portfolio.
I agree. Listen, 5 to 15. I mean, again, listen, Ray is great, right? I think 10%, 5%, but it's got to be in real physical, okay? Because when you buy paper, it's not that good, and it can do things that it's not supposed to. And remember, it has to be also with money that you have that you can afford to hold it if it goes lower.
Yeah.
Because remember, anytime you have to sell, especially like a physical metal, okay, or anytime you're forced to sell something because you need the money, you ain't getting the price you want to get for it. So you have to be able to make sure that you can afford to put it away, because in 5 years from now, maybe gold will be 4,000. I don't know. But whatever the number will be, it'll be. But I own it. I can use it. And if I need it, I can spend it.
So it was reported last week, and I know you saw this, that billionaire investor Stanley Druckenmiller bought both Barrick and Newmont Gold shares. Do you believe he did so just to take temporary advantage of an undervalued asset? Do you believe he may be seeing that gold and even the mining complex is getting close to a bottom here and about to begin a new bull run?
I think he made a trade. I don't think he's buying the, he is obviously was the famous short seller. So I think he's taking a trade, and he's seeing probably some pretty good value in these levels. I mean, he's certainly not going to jump in on something that he's just gambling on. I mean, he thinks that there's real value and that there should be some kind of move. And of course, that would tie into what we're talking about with the economy, with everything that's going on in the world. Okay, you would think that the miners in gold and silver might see a little bit of a pop here. Okay. Now, again, I'm not a big guy that says, well, I got to have it to protect my portfolio. I believe I got to have it for spending money in case I need it as cash. Okay. As money to spend to buy product. But I think that he's chasing value, and I don't doubt that there's value, because I understand exactly what he's doing and what he's looking at. And he's got enough capital to hold on to it if it doesn't go his way right away. So I'm thinking he's chasing value and inexpensive prices, looking for a pretty good pop. And it wouldn't surprise me if he gets a pretty good pop that he's out once it happens.
Do you see silver as more of an industrial metal or a monetary metal, or both? Do you think silver is going to, the gold to silver ratio is, as gold is moving, is going to actually come back down? Or do you think it's found a new place here up higher?
It's been between 88 and 90, 85 and 90. Look, it's ridiculously high. Last year, I thought silver was going to go over the 30s. I was wrong. It stayed in the 20s. It hardly moved. I think that silver is going to make a big run here at some point. Okay, I think it's never going to get back to the ratio it's supposed to be, which is 15 to 1. But I think it gets back to probably in the 60s or 70s at some point. I think it's an industrial and a monetary metal. And again, have some silver if you're going to buy some gold, and don't buy big blocks of gold. Buy coins, because because if you need change, nobody can be able to make change for you. Okay, and you need to have some silver. And silver, you can buy junk silver. Okay, because it's obviously smaller, right? So. Look, you got to have it, because I think it's for both. And I think, again, the currency issue is it's a nice investment vehicle. It's not going to get hammered. And I think if you look at it, it's also a good potential in case you need to spend it for something else. You need some smaller stuff. But I'm a big fan. I'm a big owner of silver as well. And I think that, there's always the talk of the manipulation of them holding the price down. Well, at some point, they're not going to be able to hold the price down anymore when it's ready to go. And I think it does get back into a reasonable ratio.
So do you see a role for some of the mining companies to play in your portfolio? Do you see a potential bull run coming as gold is becoming more important, both for central banks and for investors' portfolios? And, what do you think of gold royalty companies?
Again, I don't mind if they're paying big dividends, but I'm not a big fan of, miners and things like that. Again, I'm more of a physical player or a futures player, because if I'm going to invest in the metals, I'm going to buy them and put them in a safe. Okay. If I'm going to trade them, which I do trade them, I want to be able to get in and out and not invest. I don't invest for long term on paper, whether they be miners or whatever. There's too many things going on that I'm not comfortable with when there's so many other places that I can invest my money, and I'm willing to take delivery on physical metals.
Makes sense. All right. So before we wrap up here and I ask Todd our final question, I just want to point everyone over to our Substack. It is free. Just go to metalsandminers.substack.com. We post a lot of free content on the consumer, the economy, markets, artificial intelligence, individual metals and miners, and all the individual interviews that we conduct, just like this one, each and every week. We keep what is important top of mind for you in one destination. There is also premium content there. Just go subscribe. You just got to put in your email. It's free, metalsandminers.substack.com. If you've enjoyed the conversation with Todd as much as I have, please let him know. Hit the like button, the subscribe button, and leave a comment below the video. All right, Todd, in wrapping up the discussion, I've got a two-part final question for you. What sectors do you like that we haven't spoken about? And secondly, what haven't we spoke about that you want the viewers to know or consider for this year, 2024?
Sector-wise, to me, I'm looking right now. I want to be in commodities right now. I think that they're a play. I can't imagine they can continue to go at these low, ridiculous levels. I understand the competition throughout the globe, but I think that the commodity sector is a great spot to start looking. Including especially the grain markets, because again, unless we're going to stop eating and they're going to have some magic pill, okay? And I think that investors, not that they need a sector to get involved with, but I think when you're investing, you want to find companies that you suspect that say, hey, they're going to be in business for the rest of my life. Okay, that's Apple, AT&T, Verizon, any big company that makes money. Okay, I'm not concerned about how fast they go up now. I want a company to pay me a little bit of a dividend, which gives me a better tax rate on my profit. And I want a company that's going to be in business that's going to survive through the next meltdown and whatever. And I think that's more important because, most people can't afford, and I don't want to pinpoint a certain area because that certain area isn't right. I'd rather they find the companies that they like. And a lot of those good companies are found by your own shopping habits or where you do business with. You find things that you like and you look into them. And if they're a profitable company and they show projections to be in a good business, I would be an investor there.
So is there any message you want to leave the viewers with regarding this year?
I just said be careful. Look, right now the trend is higher. I mean, I'm long, okay? And I hate being long here, but I'm long. And I think you got to be very careful. If you can't be long with the market right now, then don't try to get short, okay? Sit it out. I think that, again, wait until the market signal to you. The chart of the market itself leaves a map, leaves a footprint. And again, if you're not comfortable owning, it doesn't mean that you should sell or get short right now. It means to sit on the sidelines, because I promise you that when the meltdown comes, you'll have plenty of time to get involved if you wait for it and you don't blow yourself out trying to get there.
Yeah, that's great. Appreciate you sharing that. Todd, thank you so much for being so generous with your time, your analysis, your ideas, and for coming on Metals and Miners. It's been so good to spend this time with you. Would you tell the viewers where they can learn more about your work at Bubba Trading and how they can connect with you?
They can go to bubbatrading.com, which is my website. They can also email me directly. If they have any questions, they can email me at bubba@bubbatrading.com. And for your listeners and watchers, if you don't mind, I'm going to give away my book if you don't care.
No, please.
I wrote a book that's on Amazon, Bubba's Guide to Trading Options. Okay, I'll send you a PDF file, okay, of the entire book, which goes through options trading. If you'd like it, all you got to do is email me at bubba@bubbatrading.com. I'll be happy to give you the book as my gift and as my special, because I love being on Gary's show.
Oh, that's awesome. And what about your Twitter handle? How can they find you there?
It's Bubba_trading. Bubba_trading.
Everybody go follow him. Todd knows what he's talking about. 40 years of experience. Listen to his warnings and listen to his advice. Todd, appreciate you being here.
Thanks, Gary. It was great to be on.